Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 25th of June. I'm Daniel Lam, your host for the podcast. What is the strongest trend amongst the major asset classes in 2026? Well, that's always a matter of opinion because chart reading is very much, shall I say, open to interpretation. But personally, it is the chart of the DXY index, i.e. the US dollar index, that grabbed my attention. Now, as much as all these talks about de-dollarization, the DXY index had been trending higher from just below 96 at the beginning of this year to breaking above 100 and continue to be trending higher. The significance of this cannot be underestimated. The US dollar is arguably the linchpin of many risky assets. We spoke about the weakness in Japanese yen and Korean won in a podcast earlier this week. Equity markets that do not benefit from the rally in high-end AI, such as China and India, are underperforming because of the strength of the US dollar. Now, the dollar's behavior has become more defensive since the war in Iran began. After these fears of a US dollar exit last year, the dollar has instead acted as a safe haven during the Iran war. And this is very evident from the increase in correlation between the DXY and with implied volatility from both equities and fixed income. So now, is there going to be more significant upside to the dollar at this stage? Well, it seems that many of the bullish drivers have already been priced in. Last week's hawkish tilt at the FOMC meant that the market is now pricing in nearly 1.5 rate hike before the end of this year. So the progress in the Middle East and possibly the easing in future inflation expectations, we may get a retreat in these hiking expectations. On the technical side, speculative long positioning has increased, but it's not stretched. Investor sentiment also remains positive, but that's not stretched either. So we can see the DXY potentially going back to the 100.5 support level, followed by a test of the 100 level over the next 2 to 3 months. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.